Okay, so we're going to go over a super easy trading strategy that you can use moving forward. It's effectively 3 steps, although if you want to get super technical, you could even break it down into 4. If you did any more, you're just making it confusing. Many ICT traders use this same concept. So it's effectively a liquidity sweep into some sort of order block or change in the state of delivery. And then we will go over what the entry model actually is. So it starts off with, time is fractal. So we can pretend that this is a 30-minute chart, just because I will oftentimes use the 30-minute and 3-minute. Although you could, for instance, this could be an hourly chart, and then you would go down to the 5-minute chart, and we can go over some of the other time frames that work well together. So basically, what you're going to be looking for, the first step is, and we will go through all 4 here, although I'll make the caveat of connecting 1 and 2. The first step is a sweep of the previous candle and then a close back within the range. As you can see here, we drew out an actual candle 2. So you get this big liquidity sweep and then a close back within range. And by no means does it have to be, I mean, it could be this. We don't have to, it doesn't, doesn't have to be crazy. So what do we have? We sweep the previous candle. If this was a 30 or if this was an hour, doesn't matter. We sweep the previous candle and then we get a rejection and we close back within the range of the candle. So that is step 1. Step 2, which I just combine with step 1, is to simply ensure that this is happening at a relevant spot. You can't simply take every single sweep of a 30-minute and apply this logic. That's just bad pattern trading, and you will not be a profitable trader. So context matters. In the first part of the context is, where did this sweep happen? Did it happen in no man's land where it's completely irrelevant? Well, then I don't really care about it. I'm going to wait for the next one. Or did it happen, did you just sweep, London low? You sweep London low, you get a strong rejection, and now you get this candle too. Yeah, that's now a relevant spot. Was it yesterday's low? Was it yesterday's high? Was it last week's low? Was it Asia high? These are all, midnight open. These are points of liquidity. Another thing you could think about is, did it reject out of a higher time frame fair value gap? So if we're on the 30-minute here, maybe this is it's a daily fair value gap, and we went into the fair value gap. It's a higher time frame, so it is of course more important than the fair value gaps on the active 30-minute chart. And then we see this strong rejection. The 50% holds easily. And then you get this big rejection up. Yes, that now becomes, not only did we sweep the previous candle, but the sweep happened at a relevant spot. Okay, so the next step after this, I would again say that's just step 1. You get the sweep of the previous candle. Not only do you get a sweep, but it is a sweep in a relevant place. Okay, if you are a brand new beginner and you want to get super technical, yes, step 1, simply look. Did this candle that just closed, let's just pretend this closed, okay? Did this sweep the previous candle low or high, if we were in the other direction, of course, and then close back within the range? Yes, it did. Now, what if we did that? No, we immediately break rule 1, which is a close back within the range. We closed, the close of this candle is below the low of this candle. So in this case, we still would want to wait. Or we would want to try and look for maybe some SMT, something like that. Because yes, this is still relevant. We are getting rejection off of the daily fair value gap, but we are not closing back within the range. We would want to wait, or at least start taking in a lot more context. Like I said, maybe SMT, something like that. A little bit more advanced. So that'll be another video. We're just going to keep it super simple here. So that's step 1. Okay, now the next step, step 2. We then need to go down to the time frame that matches with what we were just on. So again, if we were doing the 30-minute, we then want to go down to the 3-minute time frame. For what it's worth, you can use the 2-minute in this case as well. And it's not that you can't use the 1. It's just there are certain time frames that simply are optimal, and that's what you want to be kind of sticking with. 30-minute, we drop down to the 3-minute or the 2-minute. If this was the 1 hour, we would be dropping down to the 5-minute. If this was the 4 hour, we would drop down to the 15-minute. And if this was the 15-minute, we would drop down to the 1 minute. Okay? So, and I can post those again. It's in some of my other videos. It's everywhere. You can find it very easily what time pairs work best together. So we first get the sweep of the previous candle. Like, this is honestly irrelevant. We don't even need that. You get the sweep of the previous candle and a close back through. We then say, okay, it also happened in a relative spot. We created a nice candle 2. Now I can drop down to the 3-minute time frame where we can go to step 2/3, depending on if you're using this as a 3 or a 4-step model. Okay, so what are we looking for? A change in the state of delivery. If this is a reversal setup, we are looking for a change in the state of delivery. This is not necessarily a continuation. Continuations, although similar, are somewhat different, so this is primarily talking about reversals. A change in the state of delivery. You see that there are these 3 candles that go down. Let's make this the sweep just to make it easy. It really doesn't matter. This could also be the sweep with a bullish close. Really doesn't matter. Just to make things slightly easier, we'll say this was the sweep. So you get this 3 candle down close. This made the low, which was here. You then wait for a candle to close above what made the low. So it needs to close on the open of the candles that made the low. This is what we call a change in the state of delivery. As you see, we close through. Now, what happens if it was this? No, this is not a change in the state of delivery. It does this a lot. In fact, it's not even uncommon to do this. This is even worse. People will see this, they say, oop, displacement, I'm just going to get in early because I am too impatient to wait for it to close. And then what does it do? All it did was sweep this high, pull the liquidity, and go lower. And you get stopped out. I guarantee you, many people who are watching this video have been stopped out this exact way. They do not wait for the candle to close. Candle closes, okay, now we have completed the second step of the model. And all this is, by the way, is what? It's this wick. That's all that it is. So once we have this, we then look for entry. And when we're looking for an entry, you want to wait for the next candle to effectively come back in, create the fair value gap, or dip into the existing fair value gap. It depends on how the sequence happens. But you generally want some sort of retest, okay? Maybe it just touches this orange change in the state of delivery, all right? It can just touch here and you are good to enter. Okay, so let's get into the chart and we can actually see how this plays out. Okay, so now that we're on the chart, you can see that I have all these higher time frame candles next to me. So instead of simply focusing on like one pair of time frames, we can just cycle through all of them to show you how time is fractal and how it really doesn't matter. In fact, some time frames are going to give you better looking setups than others, and that's why it's important to be adaptable. Okay, so what do we have? Well, on the short term, let's just put out some liquidity spots that we would be seeking. You have equal highs here, here. We'll just lay these out for now. Below us. And this is really what, I mean, you should be doing every morning, is finding out where the targets are. I mean, and ideally you're doing this on a higher time frame, so it would be something like the hourly. So what did you see? Which is what we just did, okay, just on a lower time frame. So if you come down, you're on the hourly. We have liquidity here, we have liquidity here, we have liquidity resting below, below. Context-wise, what are we doing? Bearish, okay. Close to the 50% of this range here. But anyways, this is what you want to be doing. Let's go down to the 5-minute, which generally pairs with the hour, but we'll stay adaptable. We need to be looking for that sweep of the previous candle. So what time is it? It is 21:20. So let's play through a few candles. Let's get to the top of the hour. Okay, so now we're at the top of the hour. It's important to understand where we are in the phases of price. So accumulation, manipulation, distribution. We have the distribution here, and we have lots of smaller versions of this throughout, as I'm sure you can see. After distribution, what do we have? Accumulation, which is what we are actively doing. Do we trade in accumulation? I don't, nor do I suggest it. I would then come in here, I would want to see, all right, where am I currently getting met with resistance, which would be this bearish fair value gap here. I mean, really from a context-wise, this is why it's really important. Context is important. Context-wise, we're bearish. We're getting resistance from this bearish fair value gap. Liquidity is below us. And that's important because what are the higher time frame candles showing us? Well, they're showing us our model playing out. The hourly. What did we just get? Did we sweep the previous candle and then close within the range? Yes, we did. This is a candle 2. So now let's go to the 30-minute. We're not going to, this is just opened, so we're not taking this into consideration. This 30-minute candle, did we sweep the previous candle and then close within the range? Not only did we do that, we almost engulfed it. This is a very bullish signal. 15-minute, so we actually did this about a half hour ago. Created the candle 2, swept this, closed within range. Candle 3 is right here. So the 30-minute and the hourly looks like it may be actively creating its candle 3. So this is all showing bullish. We got the sweep, high, sweep, high, sweep, strong rejection higher. This candle also just opened up. So many could argue, well, we have to make the wick. Even if we are bearish and we think we're going down here, we still have to make the wick. Okay, fair enough. Where would we want to see that wick get made? I mean, ultimately, we would want to see the 50% of the candle itself get respected and then around the open of it. So somewhere here, I would want to see price respect, which happens to fall basically right on top of this bearish fair value gap, as you can see. Okay. All this context taken into consideration, should we be considering this as like, yes, this is step 1. We should start going down into the lower time frames, looking for the change in the state of delivery to go long? No, I would never suggest somebody do that based on everything else playing out in the context. If you do, you are pattern trading and you are trading a retracement. Trading a retracement isn't necessarily wrong. Pattern trading, if you are pattern trading, you will not be a profitable trader long term. Let's pretend that we're pattern traders for a second, because ultimately that's the whole point of this video, is just to show you the model, how you would mechanically look at it, how you would see it. And we're on the 5-minute here, which we as we already discussed, we got that beautiful candle 2 here. So we'll match it with the 5-minute chart. Now what do? We look for what? Well, what made this low? This low, it's all the same low. What made it? Okay, we're right here. Well, it's a little bit choppy. You know, somebody might say here, like just call it this. I mean, it would make probably more sense to call it this. Actually, none of this makes sense at all, because again, you would really want to wait for this to get inverted completely. But we're not talking about that. We're just talking about actually doing this as a pattern trade setup. So let's say we wanted it here. Did we get the change in the state of delivery? Yeah, technically we actually already got it. So step 1 complete. Step 2 complete. Now we need to wait for the entry. So what do we look for? Look for the fair value gap that got created along the way. There's one here. Like I said, you could also just simply wait for it to dip back into the candle that made the change in the state of delivery, the low in the change in the state of delivery. So just basically when it hits, if you were to actually draw this line out, when it goes back down underneath that line, you could think about another entry there. This fair value gap is currently being respected. We wicked through it. That's no problem. As you can see here, we wick down again. The body is being held up by the 50%. That's what you would want to see. And then you get this, which is actually uh, almost poetic in how like beautiful this really is. I mean, this is almost ideal. Okay, so if you were to remove the terrible context that is aligning it, this is one of the best possible entries that you could have ever asked for, which would have actually been this. This is now the protected low. It's no longer this. So if you were to have entered around here, this would have been your stop loss. Okay. So you'd have had to go 2R from here, which isn't necessarily bad. I mean, whatever. You have resting liquidity up here. So it's not terrible. So we'll do 2R. You know, this would have been the low. So that's fine. Not bad. But what is a lot better? Or maybe this is even a re-entry, you know, and you stack on more position here. That's absolutely what I would be doing. If I got in early, I would be adding more here. Why? Because this is actually a continuation model. You would do the same thing. What made this low? These two candles. Wait for the close through, which this expansion candle 3 did. And then you would enter on the close or another retest. I don't know if we get a retest, do you? Yeah, you don't. In fact, you just take off. So we'll see. I mean, there's two different trades happening here, depending on how you entered. As you can see, the 50% of the bearish fair value gap is technically not holding. It's close, but it's technically not holding. Yeah, this is even more bullish. So we haven't inverted it yet, but it looks like we want to. There we just invert it. So this is all bullish. Even though we are in a not ideal price action, you would be trading a retracement. You would need to be an advanced trader if you're doing things like this. Really, it wouldn't make sense for a beginner to be jumping in like that. But I mean, ultimately, everything we said played out. So the 15-minute, this was the candle 2, and then what did we say back here? Well, that's the candle 3. 30-minute, we said this was the candle 2, the candle 3 hadn't been created yet. We said on the hourly, this was the candle 2, the candle 3 hadn't been created yet. If you're expecting a candle 3, what do you want to see? You want to see the 50% of the candle. Actually, in this case, you would just use the wick. You want to see the 50% hold up. This one almost perfectly, 50%, and then expansion through. This one, even before the 50, and you get the expansion through. So you're actively creating candle 3s here all over the place. I would actually feel very confident if I did enter back here. I would have been upset with myself for entering it to begin with, but at this point, I would have been fairly confident in the trade. So let's see if it works. And look, we actually go down, retest that same fair value gap. We get another rejection off it. Yeah, this is a really unfortunate trade. Both of them are actually still technically active, but this is why you just wouldn't want to trade this. This is just one big accumulation range, and this is bad trading. We almost got ticked out there, but we didn't. This trade unfortunately worked. I really wish it didn't, because it would have shown that taking in context is far more important. We took in the context. We knew that we shouldn't be going long here. We're in 2 different long trades, and currently it's 1 for 1. And is that 2 for 2? That is 2 for 2. Unfortunate. As you can see, the model's nice. It works. When you're taking context into consideration, it works even better. So just take that into consideration. Please don't get cocky and just think you can take this everywhere. You will lose a lot of money. All right? So do not do that. But okay, let's see. We'll keep playing this out. Let's go to the 3-minute chart, and we'll just simply look for like 30-minute. We'll play some candles out here. Somewhat interesting. So what you're seeing, 5-minute, and again, the lower time frame, the more noise. So we wouldn't be taking, it's nothing crazy. But what do you see? This is actually candle 2. We sweep this high, close back below the range. You get candle 3 here. You have candle 4 here, showing retracement after the bearish move. 15-minute is following this up. You get the sweep. Rejection down. 30-minute, same thing. We swept previous 30. We are actively now trading back down within the range. So what time is it here? 4:42. So let's get to the top of the hour, see what happens. You get, looks like one more sweep. Ooh, one more sweep. Okay, so we're at 5. And unfortunately, now this kind of conflicted stuff. So we would need to keep waiting. Although the 15-minute worked out, again, you should never trade this. But 30 minutes swept. The problem is we're still in this candle. It's 5:18. So we would need to wait until 5:30 before we would use this as a potential, sweep. You could use the 15. Again, this is just consolidation, so you shouldn't be trading it anyway. But again, just mechanically looking at the model as it sits, you want to wait for the close in the next candle. So we'll wait until 5:30. It's 5:18. Okay, 5:30 was actually here. So we got it. We got the sweep, the close within the range. 15-minute did as well, so we have some confluence on multiple time frames. We're now in the 3-minute, so we're right where we should be. What do we look for? What made this high? This swing high right here. I would argue that. Some might just use this single green candle. I would say that's pretty obtuse. I would use this. Okay, so this made the high, so I need to wait for price to close through. Not wick and close back higher, close through. Have we done that? Technically, although I don't like it, hardly, we technically do. A lot of people are going to sit here and wait, as they should. If it takes off without you, it's fine. You just wait for the next one. As you they set up constantly. Now we get the close through. So now you can say you could have entered here. Would have been again a really bad trade because the context doesn't really make sense unless your whole hypothesis, your whole thesis is this is the retracement, and now you are going to seek this liquidity lower. Sure, fine. I would have maybe wanted to see this get swept though, but I mean, if that's your actual thesis and you didn't trade this, sure, then I'm with you on that. That's fine. So you could have waited. You could have entered right away. Would you make this your stop loss? You can. It's a big stop loss, as you can see. Let's see where 2R would land. I mean, ultimately, if your thesis is it's going way lower, then this should be no problem for you anyway. You could do that, or you could say, well, really, we've already retested it numerous times here. If we're going to go back and break this, that really should invalidate the trade anyways. I don't like it anymore, and so I'm going to put my stop loss here. Your call. You could have also said, nope, this is a little bit too strong through. I want to wait for a retracement on the next candle if I get one. Maybe you did. So who knows? Maybe you entered like here. Your stop loss is, we'll just say, is this. Let's see how this works. You got a really actually beautiful rejection right there. Right off that. I would have been very confident in this short had I seen that. Actually, I would have told you right when I was confident would be this engulfing candle. Why? What did we do? We swept prices fractal. Sure, we're focusing on the hour, the 30, but you really want to be taking the same logic on your entries. What did we get? We swept the previous candle, closed back within the range, basically engulfed the entire thing. If you wanted to add into your position even here, I think that would be fair. I also think it would be fair if you see that going honestly break even or certainly moving your stop loss lower. At this point, there is no reason to have your stop loss up here anymore, because if it breaks this high, technically, a lot of people would immediately invalidate it. Why? Because this is the new swing high. Couple little tidbits of knowledge in there for you. Getting a little retracement, nice continuation, expansion lower. We do not get out there. And this is, again, I would have never been in this trade anyways, but it's important to see what we did. And this is why, the 2R here was a little bit close. I would have been actively watching down here, looking for how we respected this bullish fair value gap. It did its job twice already. As you can see here, we hit it, expand, touch it again, and expand again. Then we hit it a third time and get this massive rejection off it. So, there's a world that exists. I wouldn't hate on anybody for closing it when we swept these lows, because they would have also seen this fair value gap. They could have easily said, yep, this is internal range liquidity. We sweep this low before going higher to take out what? Again, your thesis at this point would probably be something like these highs, something like that. So let's see if what happens with this trade. And as you can see, that happens. It's important to take all of this type of context into consideration. But anyways, that's two different examples on two different time frames. This would have been break even. Ultimately, if it was me, I would have never been in it. If I was, I would have not only been disappointed in myself for being in it, but I would have been very closely watching how we were rejecting down here. And I guarantee you I would have closed it probably somewhere around here. I would have never allowed this to go back up and stop me out. My stop loss at this point would have been somewhere down here, and it would have been an absolutely positive trade. Also, as you can see, if you were to be watching in real time, what do you have? That same model that we're looking for. You get the sweep. Look what the hourly is doing. Sweep, engulf. 30-minute. Sweep, close back through. Candle 2, massive candle 3 actively being created. 15-minute. What do you get? Sweep. You get a little bit of a struggle here on the 15. So you really don't want to be using this as any reference anyways. You would have been on the 30-minute here. Okay, so this is going to be the last example. We're on Euro, and I turned on my indicator, so it actually shows all of the important places of liquidity that I would be looking for so that you can kind of see what this would look like. So midnight open, as you can see, we perfectly respected it here. We're trying to get it again here. Midnight open is important. What did we also do? We swept not only London low here, also Asia low. All right. Mind you, this happened at about 5 a.m. Eastern time. So this is all relevant. What else do we see? This is a higher time frame fair value gap. So this indicator marks these out automatically, and it does the time frame that it is matched with. So I'm on the 3-minute chart, so it's going to show me 30-minute higher time frame fair value gaps where they exist. There's a lot of different liquidity, sweeps that we have done that are all relevant. Now, if we were to, go back here, we get a strong rejection out of this fair value gap. If we were to not see, a person could look and say, wow, we just swept London low, we swept Asia high, we got a massive rejection out of this higher time frame 30-minute fair value gap. What now? Because that is step 1 complete of the 30. Right? It hasn't closed yet, but this is absolutely a rejection wick. What time are we at? 5:18. So we're pretty close to closing. Let's just mark this out real quick. This will become relevant. Okay, so we would need to, what made this low? These 2 candles. And you can see the indicator also marks out these orange dots, what we need to close through. Also happens to be right on top of the midnight open. All right. As you can see, none of this is random. This is all perfectly engineered. So let's see what happens. We're getting rejection from it. We did get the perfect V, right? Everything is lining up. We just need to close through this. This is where patience is. And this is where, this is what turns you from a not profitable trader to a profitable trader. It really is patience, because there are so many people, like I said earlier, who struggle to just wait for a closure through. They see these 2 candles, they see this massive candle, they follow up with this one, and in their mind, it's like, yep, this is absolutely going to seek the liquidity up here. I don't even need to wait. I'm so confident in it. And then they get stopped out. We already kind of played through. So we're going to go back, and then we'll play the actual, model out. And as you can see, we failed again a second time. And that forced us to go down, sweep this, dip back into that higher time frame fair value gap to go pick up more orders. So now let's look at what's going on here. 30-minute. We've been sweeping. We did not close back through the previous range. If you remember what I said, though, look at this big candle. We also swept this, and we did close within that range. These are things that you would start to kind of take into consideration. But again, when you look at the hourly, I mean, look, we're bearish. This is a nice retracement up, another follow through down. So there's a lot of conflicting things going on. But let's just kind of see what happens. Okay, so we got another sweep here. Now we are at 6:51, so 9 minutes until 7 a.m. top of the hour. If you look, we'll start marking some stuff out. We have this fair value gap that got created. Technically, we got some sweeps. The 15-minute swept, closed through. This 30-minute swept and is very bullish. And this is where timing matters. Remember what time I said it was. It is 6:51. We have 9 minutes until this candle closes. That means in 9 minutes, we would need price to go below this and close. So down here in 9 minutes. I would question the chance of that happening due to the rejection off of this bullish fair value gap. So I can start kind of predicting now. Well, the 15-minute did it. Technically, I could go down on the 1-minute chart and just start looking for that change in the state of delivery. It's just too low of a time frame for me, slightly noisy, unless it aligned with the 4-hour too. So again, we're on the 30. It does look like we're going to get the closure, the sweep in the closure through. Remember, we absolutely are at relevant levels. We've already gone through that. Now we need to see what made this low. Technically, now it's just these two candles. This is technically the change in the state of delivery. If you wanted, you could do this just to be safer. Wouldn't totally blame you. You would likely be seeking for something like this. Also, you have these resting highs here. Because remember, you always need targets. You should never be in a trade unless you know where you're going. And then, of course, there's also some here. And again, it depends on where the R lines up. So we can start paying attention here. Let's look. Still getting rejection. Okay, now we close through the 50. Because again, what did we get? Rejection out of this technical change in the state of delivery. We perfectly wicked into the 50% of this candle that made it. Strong rejection back through. Again, lots of things are now lining up. The 30-minute closed, what did we have? We got that nice sweep. Not only did we get a sweep, we got a beautiful candle 2. We would be hoping for maybe some type of candle 3 here. Same thing happened on the hourly. We swept, closed through. So now 2 higher time frames in confluence. This is still not done yet, so we, of course, wouldn't be taking that into consideration. If you were to go long, you could do a few things. You could have technically already been in it on the close of this candle. You would have made that 2R, and we're before that, so that's fine. You could do this. Or if you were waiting for this, and you could have said, okay, this is all actually looking nice. I have confluence working on the higher time frame. So now I'm actually going to consider this a continuation. I'm going to wait. Let me put this one back. I'm going to wait until price closes now through here. And then I would enter. If it does, we don't know if it will. As you can see, we're getting steady support here in this fair value gap. Not something you would want to see long. You really want to see a quick move. You would want this to happen fairly quickly. You don't want to get stuck here in accumulation. But let's see what happens. Okay, also, this is why time is really important. I can just tell you, where are we? April 15th. Yeah, I mean, I have no idea what happened this day, but I can tell you this was a news candle. This was some tweet, probably a Trump tweet, something war related potentially. And, you know, you get this big data wick. This is also adding more confluence. Chances are we're going to want to go back up here, clear this, and then again, all this engineered, liquidity here. So tough trade so far, but what did you get? You got this close through finally. Now you're getting a retest. If you missed the first entries, no worries. Now you can make your low here. Technically, if you were in this trade, you could even shorten your low to here because that was pretty close. You really don't want to see it go higher than that. And now we would need to go to our from here I personally would be fine with a 1.8. Actually, at this point, I would likely do this 2.3. Your call, though. I mean, ultimately, do this, okay, and then watch how price starts reacting. Maybe you go break even here, whatever. Your call. As you can see here, very close. We don't get it. Okay, so this one clears. We sweep this liquidity, so we can get rid of this now. Also, starting to look like these are what are we doing? Are we potentially reversing here? Or not reversing, but at least a deep retracement? We don't know. Let's get rid of this one. This is already a winning trade. We do know that we have tons of liquidity right above us. So I'm certainly not shorting this. I'm never going to short with all of this liquidity resting above. Not going to happen. I'll wait for the next trade. Even if this takes off without me, I don't care. Takes off lower without me, that is. Because again, what are all of the higher time frames doing? Well, they're starting to create that sweep and then it closed back within the range. What time are we at? We are at 9:36 a.m. So this is the 9:30 open. All right. 10 a.m. is a major timepiece. Why? We get a new 4-hour candle. So we can actually start to look at this 9 a.m. Let's see what happens. What did we do? This is a large rejection wick, so let's only use the wick. We want to see the 50% get respected. Did this 4-hour clear previous and close within? Absolutely. So the highest of time frames, I mean, we're not using daily, weekly. It actually cleared the previous few candles and closed within all of them. Next 4-hour candle, what happens? We easily respect the 0.5. In fact, we easily respect the 0.25 and we start taking off. So everything is aligning still bullish. This, what it's showing, again, could just be a retracement. And you need to be careful because if you just start looking for this pattern, again, now we're talking about pattern trades, you just start to see all these sweeps in the close in and you just start drooling. And you just say, okay, I'm going to look for the change in the state of delivery. What happens? Did we get it? Yeah, sure. We swept that liquidity. What made this high? This green candle. Okay. Did we close through? Absolutely. Not only did we close through, we're actively retracing to it. So now the pattern trader goes, ooh, perfect. Now I'm going to go short here. I'm going to go to my 2R. Again, I pray this doesn't work. We will see. And thank God it doesn't. What you did do, though, and again, once you become very advanced at this, it's actually fine to trade this short because you would be looking for these lows. You would have never done a 2R trade there. I'm just saying 2R because everybody suggests 2R. Smart traders start to understand you don't need to chase 2R every time. If you have a clear 1R, take it. If you have a 1.5, take it. Those are base hits. You have plenty of profitable millionaire traders who trade 1R trades. That's all they care about. So you can, again, be flexible. You're not really considering, oh, it's not 2R, so I can't take it. Or, here's 2R, so I'm just going to put it there. Well, like we said, I mean, it needs to be aligning with obvious liquidity. Don't go into a trade if you're not sure where price is likely going to go seek. Okay, so we just swept this liquidity. We haven't taken this one yet. So I'm still never going to take that short. Unless I am very quick. I mean, this would have been a very quick trade. You see that and you immediately take all your position out. Would have been very risky. Don't recommend it. But once you become more advanced, you start to see things like that. But instead, what did end up happening, this second trade we took was fine. And if I'm still here watching and we come this close to sweeping this liquidity, I'm going to wait for the continuation model. Let's just see if it goes and ends up getting taken. I'm sure it will. There it is. We take all the liquidity. So when context actually starts to line up, you see these trades just work beautifully. Again, this beginning part, if you were in it, very unfortunate. We're waiting for, news or the open. But once you're in there, we just had 2 perfect trades set up, simply using higher time frame sweeps, ensuring that it was aligning with the context and that the sweeps were happening in relevant points like they were down here. Remember, we swept Asia low, we swept London low, we were dipping down into that higher time frame 30-minute fair value gap. Those are all places in which you can start to look for potential changes in the state of delivery. We got it and we rode it long.